If you have a $10,000 balance across your credit cards right now, and you are only paying the minimum, let us call it what it actually is. You are not paying off debt. You are paying a monthly subscription fee to stay broke. At today's average rates of 24% to 28%, paying that tiny 2% or 3% minimum is a broken algorithm. It will take you roughly 25 to 30 years to clear that balance. Worse, you will hand over more than $20,000 in interest alone on a $10,000 principal. Credit card companies optimize their statements specifically to lock you into that compounding interest loop. They do not want you debt-free. They want recurring yield on your life for the next 3 decades. Today, we break that cycle, whether you owe $3,000 or $30,000. And even if your monthly cash flow feels completely locked up by inflation, rent, groceries, and gas, this is my step-by-step mathematical blueprint to eliminate credit card debt fast. I am breaking down the immediate triage to stop the cash drain, the 2 most efficient payoff protocols, the exact phone script to cut your APR down today, and how to accelerate your payoff timeline without burning out. Before you put a single extra dollar toward your balance, you must execute step 0. Stop digging the hole. You cannot debug a system while someone is actively injecting errors into production. That requires 2 non-negotiable actions today. First, eliminate digital convenience. Go into your devices right now and strip every credit card out of Apple Pay, Google Wallet, Amazon, DoorDash, and your browser autofill. A few years ago, I ran an audit on my bank statements and realized I was leaking over $500 a month on impulse purchases simply because the checkout latency was 0. The moment I deleted my saved card profiles, every single purchase required me to physically walk into another room, grab my wallet, and manually type in 16 digits, an expiration date, and a CVV code. That 2-minute delay alone killed 40% of my mindless spending overnight. Friction is your best defense against bad habits. Second, switch all your daily operating expenses, groceries, fuel, basic supplies, strictly to cash or your debit card. For the duration of this payoff sprint, your credit cards are completely frozen. If the liquid cash is not sitting in your checking account today, the transaction does not execute. Now here is where most people crash. They throw every spare dollar at their card on Monday. Their car battery dies on Thursday, and because their checking account is at 0, they put that $400 repair right back on the card. You fix that structural vulnerability by parking a $1,000 to $1,500 mini emergency fund in a separate high-yield savings account before aggressively attacking the principal. That is your financial shock absorber. When unexpected expenses hit, and they will, it ensures you do not reboot the debt cycle. Next, audit the exact numbers. Most people avoid checking their total balances because of the anxiety, but clarity gives you control. Open a spreadsheet or a clean note and map every non-mortgage balance across 4 variables: creditor name, current balance, interest rate, APR, and minimum monthly payment. For example, say you have Card A with a $2,500 balance at 26% APR and a $75 minimum, Card B with $6,000 at 21% APR and a $150 minimum, and Card C with $1,200 at 29% APR and a $45 minimum. That is a total debt load of $9,700 with a baseline burn rate of $270 a month just in minimums. Make sure automatic minimum payments are turned on for every card, so you never trigger a late fee or damage your credit score. Next, we build your Debt Acceleration Fund, the dedicated capital above minimums that will eliminate the principal. Export your last 60 days of bank transactions. Filter every expense into fixed essentials like rent, utilities, and insurance versus variable costs like dining out, subscriptions, and recurring memberships. We are not doing an unsustainable starvation budget. We are running a targeted 90-day sprint. Cancel every recurring subscription you have not opened in 2 weeks. Pause unused gym memberships and train outdoors. Batch prep lunches 3 days a week. Reclaiming just $150 to $250 a month from silent cash leaks gives you a powerful monthly weapon against your principal balance. Once you have your inventory and your monthly acceleration fund, pick one of 2 proven routing strategies, the Avalanche or the Snowball. With the Debt Avalanche, you sort balances strictly by interest rate from highest to lowest, regardless of the balance size. You pay the baseline minimum on everything except the card with the highest APR, in our example, card C at 29%. Every single extra dollar from your acceleration fund routes straight into paying down card C. Once card C hits zero, you roll that entire payment stack into card A at 26%. This method is pure mathematical efficiency. It minimizes total interest paid and clears the debt the fastest. With the Debt Snowball, you ignore the interest rates entirely and list your debts from smallest balance to largest. Card C at $1,200, then Card A at $2,500, then Card B at $6,000. Personal finance is 20% math and 80% behavioral psychology. Knocking out a small balance in 60 to 90 days delivers a massive psychological win. You eliminate a recurring monthly account from your life and gain immediate momentum. If you are analytical and disciplined, run the Avalanche. If you feel overwhelmed, burned out, and need fast psychological wins, run the Snowball. Pick one protocol today and commit to it without switching back and forth. To compress your payoff timeline even further, deploy these 3 optimization tools. Tool number 1, negotiate your APR directly over the phone. Most cardholders do not realize you can challenge your rate. Call the customer service number on the back of your card and use this exact script. Hi, I have been a customer with you for several years. My current APR is 27%, but I am receiving 0% balance transfer offers from competing banks in the mail. I want to keep this account active, but I need my rate lowered to 16% to justify keeping it open. What promotional or hardship rate can we apply to my profile today? If the frontline representative gives you a standard refusal, politely ask to speak with the retention department. Once transferred, calmly read the exact same lines. Because credit card companies spend hundreds of dollars to acquire a single customer, retention teams have wide discretion. In under 5 minutes, you can often lower your APR by 5 to 10 percentage points for a 12-month window, saving you hundreds in interest with zero impact on your credit score. If a representative still refuses, politely hang up and try again with another agent. Tool number 2, deploy a 0% balance transfer card. If your credit score is roughly 670 or higher, you can often qualify for a balance transfer card, offering a 0% promotional APR window for 12 to 21 months. Shift your highest rate balance over up to the approved credit limit. You will usually pay a one-time 3% to 5% transfer fee. On a $5,000 balance, a 4% fee is $200. But if you were paying 26% APR, you were losing $1,300 a year to interest anyway. You lock in an instant net savings of over $1,000. Divide the balance by the promotional months. $5,000 across 15 months equals $333 a month. And automate the payment. Make sure it hits 0 before the promotional clock runs out so you never pay standard ongoing interest. Tool number 3, generate temporary sprint income. You can only cut expenses down to a hard floor, but your earning potential has no ceiling. Allocate 5 hours a weekend to freelance work or gig delivery. Liquidate unused electronics and gear online, and route 100% of tax refunds or work bonuses straight to the target debt. Treat this extra money as invisible cash. It bypasses your checking account completely and goes directly to the principal balance. When that final balance hits 0, you will feel an incredible amount of pressure lift. But the biggest vulnerability window is the 90 days immediately following debt freedom. Do not cancel all your paid-off credit accounts at once. Closing old lines of credit reduces your total available credit, which can cause your credit utilization to spike and lower your credit score. Instead, keep your oldest 0 annual fee card open. Assign one minor recurring utility or subscription to it. Turn on automatic monthly statement balance payoffs in full and store the physical plastic away in a drawer. Take the full monthly cash flow you were throwing at debt and redirect it into building a complete 3 to 6 month emergency reserve in your high-yield savings account. Once that financial moat is built, you will never be at the mercy of credit card companies again. Getting out of credit card debt is not about perfection. It is about running an efficient, disciplined system. Every $20 payment above the minimum is a direct attack on interest, and a concrete step toward financial independence. Drop a comment below with your target payoff date or the specific strategy you are executing today so we can keep each other accountable. If this roadmap gave you value, hit the like button and subscribe for more real-world high-efficiency blueprints. Thanks for watching, and I will see you in the next video.